G'day, g'day. Happy Tuesday, everybody. Hope you're doing well. Let's get into the charts and see what's ahead of us today. We'll start by looking at the calendar, which is where I always start my day. So we have news today, 10 a.m. news. We've got consumer confidence and JOLTS job openings, so we can anticipate some volatility around this time. Therefore, I wouldn't be looking to take any positions until after 10 this morning. All right, let's go to the chart. Let's jump out to the hourly for a sec because I wanted to just touch on yesterday's price action, which was initially quite seek and destroy. If we go out, we can't see the so we can see we had the range, Asia range high and low, and then London took that high, and then New York took the low, and then we ended up coming back up into the range. So just wanted to point that out. This is a classic seek and destroy day, which is a day that we would normally just be patient and then seek and destroy. We can look to trade the extremes of the range. So if I draw that out, so for example, if this is the high of the Asia range, then you would wait for a sweep of that range and trade it back to equilibrium. So this is the equilibrium is the middle of the range. Likewise, when you get a sweep of the Asia range, you could look for an opportunity to come back to equilibrium. And you can see that the equilibrium of the range was almost midnight open yesterday. So just a little showcase of seek and destroy. To be anticipated as well, because we are heading into heavy news for the rest of the week. So let's go out to the daily and have a look. All right. So yesterday I was looking at price to be making a bullish move. Now price did move higher, as you can see here. Price did move higher. However, it did sell off and ended up closing slightly higher than open. I was targeting price to reach at least into this daily SIBI. It didn't do that. And beyond that, I was looking for external. Interestingly, today's candle's already taken Monday's low. Now, does that mean we're going to continue higher? To be honest, at the moment, possibly not. We've got to look at what we've been given here. Price has just about reached internal. So then we'd be looking back to external. Okay, which would be our, Thursday low. So The other thing to note is that here, if we drop over to ES quickly, you'll see that ES reached into the gap. So we've actually got an SMT here. So you can see if I draw that out, you can see ES tapped into that gap. All right, so we do have an SMT on the daily. So I'm going to call it bearish today. Looking for price to move to external. And if we go to the hourly, and you can see it is quite of a consolidation profile through here. We're within this range at the moment. Okay, so we're still within Thursday's low and high. So we're within a range. Ideally, I'd like to see one side of this range be swept. Obviously, this is that SMT we were talking about. So that's a bearish SMT that we have with ES. We also have a sweep here, so we've got a bearish breaker. Here's our sweep. There's a stop hunt. We also have low resistance liquidity on the other side of price. Now this is just a breaker. We don't have an FVG aligned. And if I mark the equilibrium, you can see price has wicked straight off that twice. So that breaker appears to be holding at the moment as resistance. And if we want to run our projections from the high that took liquidity, so on the leg from the low to the high that took liquidity, standard deviations, and you know, I do like that the -2 to -2.5 is aligned with these lows. All right, so bearish for me on the hourly as well. Do we have a change in the state of delivery? This is our leg that swept liquidity. We do. This one. So we got a FVG pushed away. So that's our displacement. So we want to see displacement for a change in the state of delivery. Yes, price has pushed through there, but it appears to be respecting that level. So we'll just have to see how this plays out. But currently, bearish profile for me, or bearish structure. Let's go to ES. Drop out to the daily. So Here's that gap we marked out just before. All right, so ES reached up into that gap. So we've got internal to external. And we reached into that gap and we had a reaction. We also took previous day high in that move and created this SMT with NQ. So looking for price to move external. So again, bearish on ES like NQ. And having a look at the hourly here. You can see that ES did take the high of that range with this manipulation here. Like NQ, we also have a bearish breaker. It's not a unicorn because there's no FVG aligned. Oh, that could be a very small one just in here. Could be a very small one in there. So we run our projections out. We have these relative equal lows here, or low resistance liquidity. High resistance liquidity. And our standard deviations align with that. So it's a good target area, in my opinion. And we're getting a reaction off this breaker, just like we have on NQ. Again, it's respected that midpoint of the breaker a number of times now. So bearish on the hourly structure and on the daily time frame for ES. All right, let's have a look at oil. Clear that up. All right, on the daily. So oil has managed to reach into this gap, an area of internal liquidity here. Oil has been quite bearish, has disrespected internal and these lows. So it'll be interesting to see how price reacts here. Can this gap hold and send price higher? Looking at our internal to external relationship, then I would suggest being bullish today, even if it's a case of just moving up and closing this gap. All right, but we have tapped into this internal, so I'd anticipate price to creep higher. So bullish today. Okay, on the hourly, what's the hourly got for us? So we've got a sweep of the low here. Lots of low resistance liquidity residing up at the highs here. Relative equal highs. Again, low resistance liquidity. So we could also look at this bullish candle here as a bullish breaker. You know, we've got our move low, high, lower low, higher high. That's our entry function. That's what we need to see. So let's mark that out. We also have an FVG aligned with our breaker. So that's here. Bullish breaker. And our projections would be run from this low to this high here, because that's the leg here. This is the leg that took liquidity. And our max extension would close that gap that I was talking about on the daily. This is also a change in the state of delivery through here. So if price can hold this level, this breaker and this change in state of delivery, then we can expect to see prices to move higher. So daily bullish time frame, and daily time frame is bullish, and hourly structure is also bullish. Dixie on the daily. I hope you guys are getting some value from these videos. If you are, I'd love you to like and subscribe and share it around. So let's have a look at Dixie. So Dixie reached up here to internal. Reacted to the mean threshold of our internal level here. So we can actually look to the external range here. So bearish on Dixie. So look at the hourly structure. So that was that consolidation I think we discussed yesterday. You know, it's just sitting in this consolidation in this range. Got a sweep of liquidity here. Got another sweep with a stop hunt here. If price is able to close in the next 7 minutes below this, that would be a bearish breaker with an FVG aligned. You can see here that the projections align nicely with some low resistance liquidity through here. So it's starting to look bearish to me. We'll get this roll and head a bit lower today. This would also be changing the state of delivery should we get it. Price is just getting a little nudge up there. A few minutes to go on the candle close, because this would be the first moment in time that we get a change in trend. We had our sweep here. I don't need to see this sweep again. This is our important level that was swept. So if price does push up again, which it has here, and then we get this candle close below, that for me is a change in the state of delivery. The first moment in time we get a change in trend. Let's have a look at gold. Okay, so gold reached up into internal here, had a nice reaction. Wasn't able to close through that level. So we can look at gold to be bearish today. Moving from internal to external. So bearish, and if we drop to the hourly, we'll see what the hourly structure shows us. So we can see that price has been reacting to, or reacted to, this bearish PD array. We have a bearish breaker here with a sweep. This is your stop hunt. So sweep, push through, FVG aligned with the breaker. And the breaker is holding at the moment. Price hasn't been able to push and close back through that level. This is our FVG, which is actually where price hasn't been able to close through. So be interesting to see what price does from here. If we run our projections down, our -1 aligns with this low resistance liquidity right here. Cool. Analysis done for today. All right, guys, I hope you got some value out of that. I hope it's helped you guys. Please like and sub. If you want to know anything else or need any more information, please leave a comment below. If there's anything you want me to have a look at in particular, please leave a comment below. I'm happy to help. Don't forget, that's the last, what do we got? 30th today, so 31st tomorrow. So jump onto those Apex accounts if you want to use them to expedite your evals for our high volatility news this week. Use code Jimmy, the link is in the description. Grab a copy of my book in the description. Would love to know your feedback. If you do grab the book, I'd love for you to comment and leave your feedback. That'd be awesome. If you want to jump on to any of my funded futures evals, again, use code Jimmy. You can get the 50K eval for $76. There's no funded setup fees with the new starter revamped evals. So keep that in mind, guys. Have a wonderful Tuesday. I hope you take some amazing trades and see success today. And we will see you tomorrow. Don't forget, tomorrow morning, 7 a.m. New York time, I'll be doing the midweek market meetup in the Ash Capital Discord. All right, guys, Until tomorrow, catch you later.